Let's move on to the World Bank now. The body has pledged $75 billion worth of fresh credits over 3 years to the world's poorest countries as part of a refinancing plan that will see it issue about $25 billion worth of debt across capital markets. Donor countries will be contributing roughly a third or so of funding. The rest, however, will come through money provided by the private sector. Now, that $75 billion will replenish the International Development Association's funding, which lends exclusively to low-income countries on pretty concessional terms. The cash will be available between the 1st of July next year and the end of June 2020. The World Bank declined to identify, however, the 47 donor countries or break down the amounts contributed or pledged by country. The bank secured $52 billion in donor funding the last time the IDA was replenished, and that was way back in 2013. Right then, let's move on to Washington, D.C. Daniel Rangers joins me now live from that city with more detail on this particular story. Daniel, this is, as I recall, the first time the IDA is blending funds from a range of sources, those raised from countries, with those raised from capital markets and the private sector. What's behind this change?
I think it's a recognition that in the current world there are so many sources of capital, and that the World Bank can use its position to basically be more agile about its lending and, frankly, to be able to lend a lot more. It enables them to access capital markets and to be much more responsive and quick if they identify a need, because otherwise they would be more reliant on donor governments to come forward. And in the past, sometimes donor governments have been reluctant. For example, if they had a disagreement with the World Bank, they might withhold some funding. This provides them not only with the agility, but the ability to have greater volumes of lending going forward for those poor countries that need it at the moment.
Indeed. So how does the IDA then avoid conflicts of interest with private funding if they do emerge? I mean, private funding usually comes in with a very clear profit motive, and private capital will not exactly be on the same page with what states, governments, or even IFIs like the World Bank may necessarily be doing.
Well, basically what the World Bank will do is it will issue bonds on the capital markets. So the private sector will be essentially borrowing from the World Bank's IDA, and it will be completely distant from any of the funds that actually go into the projects that the World Bank will look at. The World Bank has established a AAA lending rating on the markets since September, so that provides it with a very good opportunity to borrow at low rates, but also for longer term projects. So it gives it a great deal of leverage and at very low cost as well.
Indeed. One last question for you, Daniel. The IDA has also decided to focus on the push factors that make societies pretty fragile and then in turn give rise to mass migration, which has been pretty much the big story for 2015 and 2016. How will this work in practice and at the same time avoid being seen as just another crude effort to pay off developing countries to keep potential migrants from moving?
I think the migrant issue is a very complex one and involves several factors in different contexts. And therefore, the World Bank itself doesn't have the ability to necessarily influence the flows of migrants. But what it does recognize is that those countries that have an unequal share of the burden need to be supported. So, for example, in Kenya or in Jordan, in the case of the conflicts that are going on in the Middle East, those countries are basically operating a global public good because they provide support and stability in a time of instability and economic as well. There's some economic push factors there. So I think the answer to this is that the World Bank really wants to establish greater levels of support for those countries that take an unequal share of the burden. But certainly I don't think it's them trying to push migrants away, for example, from Europe. I think those dynamics will continue anyway. The risks that people take to get over to Europe will continue to be there. But hopefully, the World Bank and other international institutions can also begin tackling some of the underlying causes of that instability and economic deprivation that is leading to these underlying dynamics of refugee flows.
Indeed. Of course, we'd love to continue the conversation about public goods and the tragedy of the commons that often results, but we'll leave it there for the time being. That's Daniel Rangers live in Washington, D.C.